Hej, välkommen till Börslunch på efn.se. Ja, vi befinner oss på Nasdaq, Times Square, den här historiska dagen när amerikanerna har vaknat upp till en ny president, Donald Trump.
Och vi har med oss två gäster idag, Kevin O'Dowd from Stifel Nicolaus and Frank Hatheway, Chief Economist here at Nasdaq. Welcome to both of you.
Thank you.
So we're going to talk a lot about today's reactions on the financial markets, but we'll start right off by listening to what Donald Trump said this morning in his acceptance speech after yesterday's election.
Very sincere. Now it's time for America to bind the wounds of division. Have to get together. To all Republicans and Democrats and independents across this nation, I say it is time for us to come together as one united people.
Is that rolling? The speech? Sophia? Okay, anyhow, we'll start off. Frank, many talked about this acceptance speech, that
Yes.
Donald had such a calming voice and sort of accepting the other parties in this election and trying to unite the nation. And that's why markets have now fared quite well. What do you think?
Well, I think that's attributing too much credit to the speech in and of itself. The speech was, as you described it, it was an attempt to be calming, reassuring, presidential, following what's been a very difficult campaign. But I think there are other factors at work in the markets today than simply one speech.
Kevin, what were your reactions when listening to the speech? Were you as positive as the markets?
Well, first of all, when I was listening to the speech, I was driving to New York, and it was 3 o'clock in the morning. So I had a coffee, and I was thinking about it, and I think this is a tremendous opportunity for Donald Trump to reach across the aisle, okay? More importantly, to work with Republicans and the Senate and the House to finally get some things done. And I think that is a calming effect in the market. But prior to this election, the consensus was basically to sell a Clinton rally and to buy a Trump dip if there was going to be one. And you had that Trump dip in the pre-market when you were down limit at 3 a.m. And now I think what you have is a short covering rally. And what we really have going forward is probably a lot of uncertainty. But there are several things that we can be certain of. Is first and foremost, the results of this election were settled 6 months ago. The populists won. Clinton had to go far to the left to satisfy the Sanders voters. And Donald Trump is the king of U.S. populism right now. So I think that when you look at a Trump presidency, and you look at populism, what do you have? You're going to have closed borders, anti-illegal immigration, pro-wage growth. I think these are all positives for the U.S. market right now. Now, fair trade is different than what's Trump running on, more of a... Anyways, the bottom line is between now and the end of the year, you have a lot of uncertainty, and I'll be fading this rally and probably be taking some profits in some names because we've had a nice move over the last couple of days.
Frank, you were nodding when we heard this from Kevin, and also you were saying that it's not only the speech, there are other factors behind today's move.
Certainly.
Like the short covering, or what do you...
Well, there's short covering potentially. That implies that there were large short positions anticipating this election outcome. That maybe there were, but it would have been a risky bet. There certainly were derivative positions trying to hedge the risk that they would have to trade today. But there are sectors of the market that would have continued or come under additional pressure had Hillary Clinton been elected. I'm thinking the banking, financial services sector, pharmaceuticals. So some of these companies are doing well today.
You're saying that is a relief rally then, rather than thinking that Trump is going to promote these sectors?
Well, it's more that these sectors are not going to come under the pressure in terms of pricing in pharmaceuticals, in terms of additional regulatory obligations and burdens for financial services. So it's not so much a relief rally as much as a change in outlook for the earnings prospects for some of these sectors. So that's also part of what's driving the markets today. I think particularly more in the early morning hours. I mean, today it's simply, or at this point in the afternoon, as we're looking at the market about 0.75% from a 4% down move. It is, I think, as this train is moving, let's get on board without really a lot of understanding as to why it's moving.
And as political uncertainty increases, we see commodities like gold and safe havens like yen, they have increased. How do you look at these markets, Kevin? Are they right to be worried about the future?
If you talk about the commodity market and the gold market, I firmly believe that gold put in the bottom in December, okay? And you had a pullback in the last couple of months, and we bottomed about a month ago. And what was strange about this last move in gold prior to the election is we had gold going up with the dollar getting stronger. And that's the first time I saw really that decoupling in quite some time. So I would be long gold in here. I think you've got some uncertainty, but I think there's a lot of things in the backdrop of gold that are going to work going forward. It's a positive trade, and I would own the miners, the gold miners. So, look, between now and the end of the year, there's going to be a big shakeout in regards to what we see happening in the markets. The things that, if you look at populism, healthcare, okay, is going to be looked upon as a given right. This relief rally we've seen in healthcare stocks, these names have been crushed based upon a Clinton presidency. The biotech index, the healthcare names have been annihilated. This is a short cover rally in the healthcare names. Okay, you can cherry pick some good names in here, but I'll be shocked if you don't see some type of reform in regards to drug pricing in the U.S. The U.S. highway bill is going to be a very big infrastructure bill that Donald Trump is going to have to go to the Republicans who don't want to spend a lot, decrease deficits. They're going to have to spend. How's he going to get that through? What's the uncertainty there? You're going to have higher defense spending. Okay, Putin's not going away. The Chinese have taken over the China Sea. So you're going to see they're going to have to build the U.S. military. How's he going to get along with Republicans and Democrats to get the money to rebuild the military? So these are all questions I think are going to bring a lot of uncertainty into the markets between now and the year end, and that's why I would be fading this rally in here right now.
Exactly what you're talking about now. We've seen that in Sweden, in Stockholm this morning, that healthcare, security and infrastructure are faring very well.
Absolutely.
And you're saying that it might be temporary.
Well, look, even a dead cat will bounce if you throw her off in a high enough building. These names have been crushed.
Yeah.
Okay, where it just got to the point where it was, when you look at Celgene, when you look at Gilead, when you look at Novo Nordisk or Roche or Novartis, these names from a valuation standpoint just got way out of whack, and it had priced in probably a worst case scenario under a Clinton presidency. Now what you're getting is a counter trend rally in these names. Quite frankly, I'd be long the European large cap pharma names. I think it's a great trade in here.
But you know what's interesting with these names? It's Skanska, Astra, and Securitas that have gone well in Stockholm today. And what's interesting is that they have a very high exposure to the U.S. market. And that also seems to be a trend that you want to be exposed to the internal U.S. economy.
It's the infrastructure build.
Mm-hmm.
Exactly.
You see Skanska around the street here all the time in New York.
So what do you think, Frank, talking about infrastructure, will Trump actually be able to do all these changes? Do you think that he will invest as much in the infrastructure as the market?
I think he will certainly make the attempt to work with Congress to make a substantial infrastructure investment, as certainly the country needs it. And if you don't make an infrastructure investment now under a Republican Congress, Republican president, when are you going to do it? So I think he will. There will be, as Kevin indicated, challenges on the fiscal side. There are folks in Congress who do not want to increase the deficit and do not want to raise taxes, which begs the question of how you pay for infrastructure. But solutions to that have been found at other points in U.S. history, and if anything, Mr. Trump has shown himself to be a creative when it comes to financing, and I'm sure he has some good ideas as to how to pay for it without raising taxes and without increasing the deficit. But there is no magic wand, so there will be a way to pay for it.
Someone will have to pay, but this is a big boost, could be a big boost to the American economy. the
Yes,
win.
yes.
How important is that this clean sweep that we have now with the Senate and the House? And everyone is a Republican nowadays.
It's important, as we saw in the first year of the Obama administration. The Republican majority in the upper house of the legislature, the Senate, is not that large. So he will still have to deal with individual senators. He will still have to do things with some mind to what the opposition in the upper house thinks, but it will be much easier for him to get legislation through than it has been for President Obama over the last 6 years, or than it would have been in all likelihood had the presidential election turned out differently and the lower house of the legislature still remained in Republican hands.
Kevin, how do you think that the market interprets this fact that they now did a clean sweep? Is it an opportunity to get things actually through and get moving, or does it just bring more uncertainty?
It's a tremendous opportunity for the Republicans to work together for the first time in a long, long time. Okay, but understand that there's also going to be a conflict in regards to what got Donald Trump elected and what old school Republicans want to happen. And it's how they're going to reach across the aisle and work together in conjunction with Democrats to get stuff done. I mean, there's a lot of uncertainties in here, like what's going to happen with Janet Yellen. It's no great secret that Donald Trump is not a fan of Janet Yellen. Is she going to take the bullet for the Fed and step aside? Okay,
Can he actually kick her before her term ends?
No, can't kick her out.
So she's going to be there till January 2018.
She could resign. She cannot be kicked out.
Many have expected the Federal Reserve to raise interest rates in December. How do you look at those chances right now? How does this affect it?
Right now, with the market up 0.75% and everything looking good, it'll raise. Tomorrow's a new day. If I could predict the stock market day to day, I'd have a different job. But if things stay the way they look right now, we will raise rates in December.
The other big thing that helped get Donald Trump elected was the Supreme Court justices, right? And I heard right now that there's going to be 8 vacancies on the Supreme Court justice because Donald Trump is going to get Ted Cruz to come in as his nominee, and I couldn't even work with that guy, and I'm a Republican.
What a thought, put somebody in and the rest all quit.
We've seen different market reactions across the globe.
Yes.
In Asia, there have been quite different market reactions.
I think that was a timing issue. If we go back to the early hours of this morning, U.S. time, there wasn't a final period at the end of the election process, and you were looking at the possibility of a repeat of 2000, where we were going to come out of the election and it wasn't clear who had won. And it might take a few days, it might take a few weeks, it might go to the Supreme Court ultimately. So part of the reaction, I think, in Asia was, boy, this is going to be tight. How tight, and what's that going to do to the American political process? As you move into the European hours and certainly the U.S. hours, that uncertainty resolved itself. The vote, not only in the overall vote and the Electoral College, the mechanism we use to elect the president, but in the individual states was not close. So there's really not an opportunity for this election to be thrown in any great doubt. And so I think the Asian markets were dealing with the fact that at the time there was doubt about how this was going to turn out.
How big do you think that the uncertainty for Chinese investors are right now? Do you think there's a big uncertainty that trade will be
You know, it's a good question. You know, a year ago when we were talking about China, we were talking about a recession. Okay, and basically now what you had is you basically had them devalue the currency next year. I think growth is going to start to pick up next year. We're very positive on the Asian markets. As we talked about a year ago, commies don't do recessions. Well, guess what? When everybody was talking about a recession, they didn't do a recession. That was the case. So, you know, we're positive on Asian markets. I think the big uncertainty in there, the elephant in the room, is what's going to happen in the European elections. I mean, there's you've got France, Austria, the uncertainty in Italy, all these elections coming up. You know, what's going to happen with the EU? You know, that I think could be the big elephant in the room. And the U.S. needs Europe to do well, and Europe needs the U.S. to do well. All right. I know Trump was a little bit more Anglo than his predecessor, Barack Obama, who told the Brits to get at the end of the queue. But the end game, we need Europe to do well, pick up earnings growth. And in the interim, we've got the dollar boxed right now, trading between 106 and 115, and it's somewhere in the middle. And until proven otherwise, we'll say the dollar is boxed.
What does it take not to be boxed anymore?
That's a good question. If I knew that answer.
End of QE in Europe, which isn't happening.
Which is not going to happen anytime soon.
What do you think?
Well, I think to move the euro against the dollar and move the euro up, it would be an end of quantitative easing by the ECB, so a prospect of higher interest rates in Europe, and that just doesn't look likely in the near term. More likely the U.S. will go through a rate-raising cycle. The international central banks will then see, all right, how did the U.S. end quantitative easing? What did the U.S. do well? What did the U.S. do that could be improved? And then make their own decisions about how to go about ending quantitative easing in Europe and Japan, as well as other places in the world.
But Kevin, you're saying that the U.S. needs Europe, but the U.S. has a very big internal market economy. How important is free trade for the U.S., bottom line? I mean, if Trump is protectionist, how bad would that be?
Between U.S. and Europe, it's not the largest trade partner for the U.S. Canada, massive trade partner. Mexico, very large trade partner. So within North America, free trade is very important. Many of the cars we drive are made outside the United States in one of those two countries. For the European relationship, as I said, less so. And that's where we can put TTIP as well as the Trans-Pacific Partnership on the back burner and not really worry about negative effects in the United States from being tough on trade deals.
So should we Europeans be worried about such a thing as TTIP?
You mean the end of these trade agreements? If Europe was of one mind, perhaps the same mind as the Swedes, about international trade, then Europe should be worried. But many Europeans do not share the Swedish view on international trade. Wallonia comes to mind as a region, but they're national economies that are not in favor of free trade either. So,
looking more at specific stocks, what do you think is going to come out on top if these trade deals are to be
what's going to come
affected
on top?
Yeah, long term, what sectors are going to be affected?
I mean, obviously, look, I like the U.S. multinationals. I don't think there's going to be that much impact on the trade deals. I think that ultimately we're going to see a weak dollar, and that's going to benefit the U.S. multinationals, okay? I like the reflationary beneficiaries, which is the infrastructure trade, which you want to be buying like Vulcan Materials and Martin Marietta and MLM and names like that. And dare I even say, which I don't like long term, but you could even get a trade in the coal stocks here, sentiment trade in the coal stocks. Long term, coal's dead, but in the short term, you could get a tradable bounce there. I think you're going to see a lot. We haven't even talked about tax restructuring here.
No, we haven't.
Okay, and bringing money back on shore. What's going to happen with that money to help fund, the highway bill, et cetera, the infrastructure. Or maybe what's going to happen with REITs if they pull off the tax consequences of REITs in the U.S.? How's it going to impact the real estate stocks in the U.S.? The biggest thing.
You're finding a lot of positives here now.
Yeah, but I can give you the negatives too. It's going to take big thinkers from both parties to walk across the aisle. And I gave you a quote from my cousin earlier, which I can't even repeat. Okay, for the audience, that it's going to be really tough to get that mentality going and to get Americans to work together for the first time in say, over 20 years.
Right. We're counting on last night's speech being the majority of the behavior and attitudes we'll see for the next 4 years, as opposed to some of the worst tweet moments we could think of from earlier this year.
We had a graph, actually, that shows the market reaction on the first day after elections, and then compared with how the market has reacted a year after. And you don't see that much correlation. And if you would guess now then, in a year, where do we stand?
Well, I'm naturally an optimist, so I'd like to see us higher, but I recognize that it's been a great run for the market since the end of the financial crisis. It has to stop one year. I hope not next year. We see here Nasdaq, a very good IPO pipeline. A lot of companies wanting to go public. Many of them were in biotech, which obviously what's happening in pharma helps the biotech sector. But if I could predict the market, I would have a different job.
You have a different job.
Yes, I do.
Kevin, you said previously on our show earlier this year that you wanted to sell it all and stay away until Halloween.
Yes.
Is it buy time?
Yes, but not right. There's some uncertainty. You're going to pick your spots between now and year end, but sometime, in the first 6 months of 2017, we're going to trade at 2,300 or at 19 times estimates of the S&P. That's what I think, and I'm optimistic. I also said that the Fed, with interest rates, has basically spring-loaded 10 years of earnings into the last 7 years. And what you're going to have going forward is a market trading sideways. And it's going to be about stock picking and rotation. So those active managers you have, I think, are the ones who are good stock pickers are going to be able to outperform. To buy a spider or to buy an ETF and just hold it, you're not going to make any money.
So 2 optimists sitting here today.
Cautiously optimistic.
Cautiously optimistic.
We're ignoring the rain outside.
Thank you very much for coming.
Thank you.
Thank you.
We'll be back tomorrow, same time from Nasdaq. Thank you. Thank you.